right now.
I am Autumn, I'm a floater person.
So she covers our 9 offices in our region, so she works with Steve and I.
Good morning, I'm Steve. I work with Lake City Bank. And my purpose today is to talk about budgeting and credit. The 2 subjects near and dear to my heart. And thank you for having us and allowing us to be here today. So I am impressed. Fiscanathing is something you will use every day. And it's just something that it seems so simple, but it is so important.
Yeah, sure. Thank you.
Introducing yourself, stating what your objective is. So I think that's great that you guys are learning that. It's something you will use all the time.
Right, Steve's gonna leave with our budget.
So, in the handout, we have 2 topics I think I already mentioned we're gonna talk about today. Budgeting and credit. Has anyone heard the term budget or budgeting? Does anyone want to take a stab and just give me a quick explanation? What is a budget?
So a budget is, so like, in my opinion, it is, it's like you're budgeting for like assistance, like you're running out money, like certain things. And, credit, is that, you get lots and lots of, credits for like, getting paid for like a certain job or whatever, fast food, or even, getting ready for like a teacher or whatever.
All right, you're on track. So budgeting, we all do it, whether we realize we're doing it or not. Do you want to take a stab at it? Just budgeting is knowing how much money you have coming in and where it's going. And if you're striving to save money for a particular goal, it's really important that you have a budget. You know where your money's coming from,
So
how to
your
hold on
teachers,
to it, and where it's going.
and your teacher's already teaching you guys this. Do you have to pay rent? Do you have to budget for that?
Yes.
That's what you're doing. So we're really
How many
just.
of you guys put back a cookie because you knew you had to pay rent till Monday? Sam was back there. Yeah.
Cookie.
So it's a real basic concept, but a lot of people struggle with it.
How many of you did JA when you were in kindergarten? Right, okay, did you do the needs and wants class?
Oh, yeah.
You're right, everyone did it, so that is to set you up for now, because when you're little, I want an ice cream, but I might need clothes. So when you're a kid, you don't think of it in terms of that, but when you're approaching adulthood and you're about to go out on your own, you want to be able to, prioritize, right? Better than when you're a kid. Your parents prioritize for you when you're small, but you, and moving into adulthood, are going to be the ones who need to know how to budget for yourself. So putting that cookie back when you need to pay rent, that's the first step. So we have on our first slide, and I like to talk, so I'm sorry, I'm gonna let these guys talk too, I promise.
Go.
On your first slide, and we put it up for you, is where do you start with budgeting, right? So you have to identify your income. Can anybody tell us what income could possibly be?
How much it pays?
Perfect, exactly right, so that's one of the things. How much you get paid, does anyone know where that income can come from? Yes, sorry, a job, yeah.
Job, or like a local bank, where you get paid. Like, say for instance, working in a local bank, you get paid like, no matter what it costs.
So perfect, so like any kind of pay income, so we can count it as any kind of, if you get social security money, if you get disability, if your parent, if you get a pension. There's a lot of different ways that your income can come in, and they all count, right? We don't discount any income. Income is income, money is money, and you need it to live. So that's your income, is identifying what that is for each person, and it's different for everybody.
Yeah, for most people, your income is gonna come from your employer, your job.
Right, but some,
but that's not it, yeah, there's all different apps.
You can start your own business, you can sell things, you can make things, sell them, you can provide like do hair for people and make money off that, so there's tons of different ways you can make money too, it's not just always a
it's not always a traditional job, yeah. Great point, because I think that's really important to keep in mind. We love our job. This is one of the things we love about it, is coming here and being able to do this and helping people get set up for the next step. But this isn't for everybody. So keep that in mind. That's the start. And then how do you track what you're spending? So we like to ask this, there's no shame, but how many of you have an account, a bank account? Okay, awesome. So a lot of you actually have a bank account. Great. That's a great place to start. So we can't use Cash App. It's okay to use Venmo. It's okay to do those things also. But are you using the app through your account or through Venmo, Cash App, whatever, to track your expenses? So what am I getting in terms of income versus what I'm spending? And I know Steve earlier brought up how many people like to spend $7 at Starbucks every day.
That's honestly one of my favorite places to
Is
go
it?
to, like the mall.
So I have an example, I work with a person that went every morning on the way to work. So,
Every morning.
$7, I'm just estimating, it was seven, it might have been more, but
Yeah.
$7
Yeah.
Monday through Friday, so 5 days a week. Who's good with math? Who knows what 5 times 7 is?
55.
35?
Very good.
So $35 a week, there's 52 weeks in a year.
Mm-hmm.
35 times 52.
I don't know.
Don't worry, I did it on my watch. 1,820.
So let's just round that up. $2,000 by just going to Starbucks every day. And I'm not saying, alright, I like Starbucks too. I'm just saying, when you do something like that every day, I wouldn't think anything about, dropping $7, but when you look, and most phones or apps have tools that you can analyze your spending and it'll show you, and it's like, oh my gosh, I went to Starbucks that many times,
Or
I spent that much money.
Or if you ever went to like places like Chick-fil-A, you can like check out their meal tickets there too.
Oh, nice, so they have it on there. That's cool, that's really neat.
It is.
Yeah.
And that's a huge advantage of having an account with a bank. Almost every single bank has tools available for you to track your spending
Yeah.
and a full transaction history. Some of the smaller Cash App Zelle only show you last 3 months or whatever. And they don't always allow. I don't think they do direct deposit either. You can do direct deposits from employers, and you can see all those deposits coming in too. So you can track your income and your expenses at the same time.
Right.
It's really nice.
So let's say you have your income, you have your expenses, and maybe you spend a little bit more than you make, right? So how do we stop that from happening? We need to create a spending plan. So we always want to prioritize, and actually that'll be the next slide. But we always want to prioritize the things that we need versus the things that we want. So that's part of creating that spending plan. And like Autumn said, most of your apps have, Nerd Wallet has a free budgeting tool. We have free budgeting tools, most of your banks, but there's a lot of free apps out there that will do it with you, so that you don't need to have a panic attack on how do I get this done. This is so scary. It feels scary because it's new. All new things are scary at first, and then very easily it takes over and it becomes second nature.
And another nice thing too is when you work with a bank, especially an in-person bank, you can walk in and say, can you help me set up my online banking? I need help getting set up with it.
Yeah.
Can you tell me what's on here that I can help manage finances? So that's what we do every day. That's why we're like,
And we're throwing the term banking around
Oh, yeah.
real quick. I usually like to start, just sidebar here real quick. Does anyone know what the difference between a bank and a credit union is?
So a bank is when you receive money, right? Or use a debit or credit card, right? And the credit union is the exact opposite.
It's actually very similar. Actually, I always ask that question, but The
It's a
answer
trick
is
question.
really no, it is.
Yeah.
Because banks and credit, when we're talking about banking, you can put credit union in the place, because we do the same thing.
Yeah.
We offer deposit accounts, checking accounts, have debit cards, like you said. We also lend money for cars, homes. Credit unions were established years and years ago for a certain purpose, but over the years, it's the same thing. So I just like to throw that out there. If you have accounts at a credit union, great. It's basically the same as if you're, dealing with the bank. So I just like to put that difference.
Yeah, and I think that that's a good point. So often we do get that question at our bank, what's the difference? So really,
No difference.
there's no
for
difference,
all
and it's okay to
practical
have either
purposes.
or, wherever you're comfortable is great.
Yeah, and I'm actually agreeing with all of you guys. Because like, you guys are saying stuff about banking, credit and debit, there's no, I'm always agreeing on people.
Okay, yeah,
Yeah.
exactly.
So banks and credit unions, along that, we all offer the same thing. It really comes down to who's friendly to you.
Yeah.
Who's taking the time to come to my school and, no.
No.
Who's, no,
Who's
it's,
gonna
where does
help?
my family go? Because that's typically where people will ask. So those of you who have accounts, why did you wind up where you are, where you're at? Most likely, I'll answer. It's probably where your parents bank, or you have friends that bank there. So
Yeah.
there's no right or wrong, but usually wherever it's most convenient, very friendly. But sorry to sidetrack.
No, I think it's a great sidetrack, something to keep in mind, we do not discriminate against anything, banks, credit unions, whatever. It's up to you, it's just what you're most comfortable with and what's most helpful for you. So then, after you do your savings plan, whether it's, or spending plan, savings, spending, how do you keep that going? Right, we all have goals, and they're all different. Cosmetology school, right? So that's your goal, and that's an awesome goal. I wish I was talented like that. It's a great goal, but that's gonna help you achieve your goal. Creating a spending plan, budgeting is gonna help you get there. And if it's a goal to own a home or rent or buy a car, put that in place. Utilize these tools to get there, and that's gonna really help you put that plan in action. And that's just a part. That's just a small part. Sharing that plan with somebody else also helps because they can help keep you accountable. If you have a trusted person in your life that you want to use for that, great, do that. So on the next slide, you say slide, these are slides. Analyzing your spending. So this is where we talked about.
What
Yeah,
about
please.
your credit card fees and all of that?
I did not hear. I'm sorry. Steve, did you? Credit card fees.
Mhm.
Yeah, so there's a lot of different, what's exactly are you asking? I'm so sorry. It's so early, I need more coffee.
Like, credit card fees, like,
So like what they charge and all of that?
All the fees.
all the
Yeah.
fees, that's all the.
So every credit card is gonna have different fees. So some will have an annual fee, which means you have to pay for the credit card every year. Some will have a late fee, well, all of them will have a late fee, but the fee differs in price. So it's gonna depend on the company of what they charge for a late fee. There are fees for interest. So your interest fee will depend on your credit score, which we will get into on the next slide for that. But interest is good to know about in terms of budgeting as well, because you can earn interest through money that you save, and you can spend and owe interest on money that you have borrowed. So, but we'll go into depth more on that on the next one, if you don't mind. Does that answer your question?
That's a good point, though.
Okay,
There
yes.
are fees for some cards.
Yes.
And if you're shopping for a card, you see a fee, move on, because there's plenty of competition and other cards that don't. You should never have to pay a fee to get a card.
Right,
So,
yeah.
But there are some that do charge fees. Some people,
Shopping around is really important, especially when you're trying to save. I mean, we always tell people come into Lake City Bank, they wanna borrow from me, and I'm happy to lend them money, and I will never say no to an application. But I also will turn around and say, have you looked at anywhere else to make sure we can give you the best deal? Not because I don't wanna give them a loan, not because I'm not looking for loans, but because I don't wanna put anyone into a bad position where they may end up paying more when they could have actually saved if they've done a little bit more shopping.
And there's so many credit cards out there, and there's a lot of companies that advertise their credit cards, especially with younger people. I highly encourage you to start with your bank or the bank you're most comfortable with and see what they have, or talk to them about credit cards that they have, what you're looking for. And they'll be able to at least point you in the right direction.
Yes, yeah, that's a good point, very good point, honestly. So we'll wrap this one up, but this is a great slide to use because it kind of gives you that percentages of what you should be looking for when you're analyzing your spending.
So yeah, in a nutshell, budgeting is the money that comes in. You're gonna figure out where that's gonna go. You gotta take care of your basic needs first, your rent, your food, shelter.
Yep, so 3 things from JA when we were kindergartners. The 3 things that I tell my kids, those are the 3 things I have to legally provide to you, period. Clothes, food, shelter. Those are it. Everything else is a want. Not that I don't want to give my kids those things, but if I have to prioritize, do we have food in the house? Do we have a home, a place to live? And do we have clothes on our backs, right? Those are the 3 top things that we're gonna look at when we prioritize and we budget. We have to cut something. I told the last class this. It's gonna make me sound like snot, I'm really sorry. I grew up in the 90s where we had to watch cartoons, right? We had to run to the bathroom in the middle of the cartoon because commercials were on. And I don't wanna pay for a subscription with commercials now. Like, I'm not paying for Netflix and have commercials, it's not gonna happen. But if I had to prioritize and I had to budget, that could be something that I could cut. So it just looks different for everybody. And there's no right or wrong answer in terms of this. We all have things that we wanna spend money on and we wanna save money for. Just keeping that in mind when you're budgeting. It's gonna be different for you, but we are all influenced by each other. So if you're looking on Instagram and you're seeing all these really cool things that pop up, is it a want or is it a need? And does it fit with your plan? So keep those things in mind when you're budgeting also.
And if it is a need, how can you save money?
Yeah.
Buy only what you need. Don't buy, extra, like a bundle deal or anything like that. Try to get generics if it's not something that you need the name brand for. Those are all great options.
There is in the back of your budgeting slides, there's a budget self-assessment. You are welcome to do that on your own time. It's a great thing to utilize. If you ever have any questions about it, we're here to help. But you do not have to do that today. It's just something for you to take away. Any questions about budgeting? We love questions. Please join us in our questioning. If you don't, that's okay. All right. Don't forget, Steve has money.
Pretty basic.
Steve has some big money.
So
Go ahead.
that's budgeting, and we're gonna talk about credit. And before we start talking about credit, I just wanna talk a little bit about interest. Does anyone know what interest is?
Yes.
You got a lot of answers.
So what an interest is like, say for instance, if you're interested in like having a job, having like your own business.
Oh, okay, yes, that's a different kind of interest. So you're talking about interest in certain fields, interest in.
That's what we've been doing this week.
Yeah, no, that's
Awesome.
a
And
great
that is
answer,
correct.
yeah.
Yes.
The money you owe someone, do you take out, if you borrow money from someone, as interest, the more time you.
So that
Yes, more time
interest
you-
is right,
That
but
was right. This is what I was looking for. So interest is what we do at the bank. So banking 101. This is you'll know all about banking. It's real simple. You bring money to the bank, you have extra money, you're gonna put it in the bank, you're gonna earn interest. So if I have $100, I'm gonna put it in the bank, they're gonna give me 5%. 5% on 100 is $5. So I'm gonna earn $5 for giving the bank my $100. All right, the bank, I got that $100, I'm gonna lend it to Nicole. She's gonna go buy a house. Not really. She's gonna pay me 10%. So I just borrowed the money from my customers for 5, and I lend it to Nicole. She's gonna pay me 10%. So now
that's a high interest
the
rate.
bank just made $5 for the credit union. So That's all you need to know about credit unions and banks, that's why we exist.
So
That's
that's
why
why
we
we
pay
do it.
interest on money, and that's how we make money.
Right, that is exactly why we lend and we need deposits. So really, you guys got a perfect little banking, in a nutshell.
Yeah, I just wanted to go over that before we dive into credit.
Cause credit and interest go together. Yep. Okay.
All right,
Good, got it, we love
Credit.
this one.
so who knows what
We're
a
on
credit
this one.
score is? Anybody?
We're on this slide.
Yes.
It says credit score, right?
Yep.
So, if people have this credit card, that's somewhere around, I think 800, and right in the middle, like
Very
around
good.
400 or 500.
Very
That
good.
is like 300, I think.
Yes.
Credit can like determine like where you live, like where, like certain things, like if you can buy certain things, like.
Wait, what is it? What is
What
credit?
is a credit score?
Okay.
A good score can determine what kind of credit you can get. So a credit score is like a grade. It can be, you know, you have F to A. Well, a credit score is 0 to 800. So an 800 is like an A plus plus plus. A 0 would be more like an F. So there are 3 credit bureaus in our country: Equifax, Experian, and TransUnion. They collect information from credit card companies, banks, credit unions, on everybody that borrows money from them. And then when somebody goes to apply for a loan, that bank or credit union reaches out to the credit bureau and says, what is Autumn's credit score? And they'll say, oh, she's 800. Well, the bank knows, hey, she's got a good score. That's a good grade. I'm gonna give her the loan. And also, she's gonna get a good rate and good terms. Cole comes and applies, and all of a sudden, she's got a 10.
Oh.
That's a failing score. She might not get the loan. Or if she does get a loan, it's gonna have a really lousy terms, high interest rate, not as favorable. Yeah.
So, let's say, their credit score is in the middle.
Oh, yeah.
How would y'all deal with that?
So speaking for our bank, if you have a 650 score, you get the same rate in terms as you would if you had an 800. So 650, that's good. 650 on up is good. So
If anyone's wondering what those values are, they're on the page.
Yeah,
they're
right
on the
here.
page here.
They're not numbered, sorry.
If you check your credit score and you've never had a loan, it might come back N/A, not applicable. So we see that from time to time.
So you don't have to answer, this is not a question, but if there are any 18-year-olds in this class, you may have a credit score if you have a trusted adult that maybe has added you to their credit card, but you may not have a credit score. So when I was 18, I went and my dad helped me set up a credit card. He gave me the rules for utilization, for using the card. But my interest rate at 18 with no credit, no, I didn't, I had 0, big fat 0, was 29%. That's very normal when you're starting out, but that's very high. So we used that card, I used it to pay for gas, and then I paid it back. Gas, paid it back, right? So that's one of the best ways that you can build your credit as a young person starting out in the world. We've already talked a little bit about making sure that you are not being taken advantage of, so doing research. And making sure that it makes sense, that it's something that you can pay back. 29% of interest is a lot on $20. I mean, that can add up very quickly.
What's 29% of $100? If I use $100, 29%.
I don't know, guys, what is that?
29% of 100?
How much?
29? 29 got to say $30, just around
Yeah.
the simple. So if I pay interest of 30% on $100, now I owe $130.
Right.
And then, all right, anyways, go ahead.
But if you pay it off by the end of the month, you only owe the 100.
Yeah.
So.
Typically, credit cards won't charge you interest. Pay off the entire balance the next month.
So we got a little off track, but it all goes together. It's all good to know. So when we're looking at, so in your packs, and I left them out of ours, sorry, in the middle, you have this, where you'll probably hear someone say, what are the 5 C's of credit? So 5 C's, one of the specifically, so these are what banks and credit unions look at when you look at your credit bureau, your credit score. They ask, have they been paying on time? Have they been using their credit card or their loan properly? So are they paying back on time? Are they paying the correct amount on time? So that's character. Next would be capacity. So can you handle the loan? So they're looking at your debt and your income and they're saying, is this something that they can pay back? Your capital, if you have a down payment, are they able to come up with anything to provide towards that loan, for like a mortgage, for instance, or a car loan? Does anyone know what collateral is? I like this one. Okay, it's okay. So collateral is basically any asset that you can provide to a bank or credit union that will lend you money for that item. So a mortgage, that house becomes the collateral that goes to this loan. And then conditions. So we brought up in the last class, the housing market crash of 2011. That impacted lending in a big, big way. So the interest rates went up. Steve was around for this. I had a child, so I was a little bit lost in that. But there was a lot of things that went into lending at that time. So we look at all these things and we say, does this make sense to lend Autumn money right now based on these 5 C's of credit and where she is at personally? As a bank, Lake City Bank is very good at this, but most banks, they're so heavily regulated, they're not gonna put you in a loan that doesn't make sense, where you're gonna have to pay more money than you can afford.
So Nicole, what's collateral on a car loan?
Oh, that's a good question, Steve. Does anybody know what my collateral would be on a car loan?
Depending on what car you're getting.
It's your car, right, exactly, it's your car, whatever the
Vehicle
car
loan.
is, yep.
So on a car loan, the collateral is the bank's gonna hold the title to my car. On your home loan, a mortgage, the bank is gonna have a mortgage report with the county that says we have an interest in their property. On a credit card, is there collateral?
No.
There's not. So a credit card, you might hear the term unsecured loan. A credit card's an unsecured loan. So the reason collateral matters, the better the collateral, the better the rate you have. Because on a house loan, I don't wanna lose my house, so I'm gonna make sure that gets paid every month.
Like
So-
3 things that are important.
And on a
Clothes,
car
food,
loan, I wanna keep that car, I don't want the bank or credit union to take my car away, so I'm gonna make that payment. So collateral gives the credit union or bank more comfort. We're able to give you a better rate, because we know that loan's probably gonna be, you're gonna make payments. Credit cards have a higher interest rate because they're unsecured. You can walk away from that, there's nothing we can come pay. So that's why you get charged 20-30%, make up for that, so.
Those all lead into the next slide of building your credit. All those things, we take those into account when we're doing loans. So building your credit, like Steve said, a credit card's your easiest way to build credit. A secured card means that you provide collateral and funds in terms of funds, so money, and they will give you a credit card to use to help you build your credit. As someone who's 18 or does not have a credit score, or a good credit score, that's gonna be the best way to build credit. And that will help you establish your character. You're showing that I make my payments and I make them on time. Maybe I make a payment that's higher than what they're asking. And so you're building your character, and that's something that we look at in the long run, which is good.
And the nice thing about using a credit card to build credit is that you really only have to use as much as, well, you don't have to use it at all, actually. So you can put as much on there as you want. You can literally just use it for gas. You're going to build credit by getting gas for your car to go to work every day.
Yeah.
So,
And that's exactly how I was taught to use it when I was 18. Use it for gas, pay it off. Use it for gas, pay it off. And it really did help. And by 6 months, I was able to turn around and get a car loan on my own. Now the interest rate was very high, but I didn't have enough of the 5 C's established just yet. So one of the things we like to point out on this slide especially is small loan with a cosigner. So does everyone know what a cosigner, when you sign for a loan, Do you understand what that means, and what a cosigner would then mean on the other side? Anyone? Okay, so when you sign for a loan, you're saying this debt belongs to me.
Yeah.
I own this debt, I'm paying on this debt. When you co-sign for a loan, if you come to me, Sam, and you say, Nicole, I really need this car, I need you to sign with me, what I'm saying is, Sam is signing, saying he's responsible, I'm signing, saying I'm responsible. So if Sam can't make those payments, it falls back to me. And you never recommend co-signing. So it's something that, you know, sometimes we have adults that can help us with a loan. For instance, my son is starting to drive. Do my husband and I want to co-sign on a car for him? Maybe, probably, but if you don't have that adult in your life, I didn't ask my brother. I would honestly tell them very nicely, no. Let's see other factors and what else you can do to help. It's just something that very easily can become your debt, and if you're not ready for that debt, it can send you spiraling. So we like to say no to co-signing if you can help it.
Because co-signing really, it becomes your loan. Like, if you
Yes.
co-sign for a loan, that is also your loan.
It is
You
your
have to
debt.
pay that.
Yep.
Even if, you know, your relative says, oh, you won't have to make payments, if they don't pay, you have to pay. So it's just not recommended.
Yeah, and part of that is because as a young person, you never want to get yourself caught in a credit trap. So always read the fine print, always do a little bit of research, and if you have a trusted banker or a trusted person, ask them, does it make sense? And that's always recommended.
It's not bad thing to co-sign, but if you do co-sign, don't ever expect,
Doesn't make sense,
right,
doesn't make sense.
sometimes you have to, but typically that's gonna be with the spouse, family, as it really
Spouse trap.
doesn't really do the co-signing good.
Co-sign for your
It's
kid
doing
and the
it.
person you're married to.
That's it.
Never
That's
boyfriend,
it.
never girlfriend, never friend, your kid and the person you're married to.
Yeah.
I said that, spouse and friend.
That's-
Yep,
Wow.
spouse and kid, rather. Exactly, so then what happens if you get into a point where you have to repair your credit? And I think it's not just kids, there's a lot of adults that go through trouble too, right? We teach this to adults also. Budgeting comes first, that will help you stay out of trouble, but if you get into bind, how then to repair it? Secured credit cards, staying away from people that will lend you money, predatory loans.
Or try to bribe you, if they, like, say for instance, if you're, out in the road, like, out in the street, car, and someone walks up to you and asks, hey, do you have any cash, whatever?
I mean, if you don't have the money to give, yeah, that could definitely put you in a bind, right? So making sure that you're doing as much as possible and doing some research to help.
Yeah, I think an important part with this slide in particular, if you're in trouble with your credit, don't take out more debt to improve your credit. It's like, you want to keep your debt as low as possible, make purchases with cash when possible, save up for any large purchases. You know, if you're struggling with credit, a lot of places, you know, a lot of predatory loans start that way. You know, they see somebody with low credit, they'll say, hey, you can build up your credit, but really what they're doing is they're gonna charge you a high interest rate, banking on the fact you might not pay it back. So just a little bit, like picking out a little.
No, I think that's right.
That's really where I was going.
So another thing, Nicole, say you lent me money and I can't make my payment this month. Is it best if I just ignore you and run away? You know, if I see you turn the other way, or would you rather me come talk to you and make arrangements?
I would hope that she would come to me and make arrangements to pay. Never ignore a debt, it won't go away. We'll always be
If
there.
you fall in hard times, call or go in, talk to the person that has the loan or the credit card. They would much rather work out and make an arrangement than to have you just avoid them and not go anywhere, so.
Yeah. So there is an example of, does anyone have any questions? I feel like we're just talking at you. Yeah, please.
So, how many people avoided, debts and all of that, for your bank?
Oh, man, it depends. Maybe see the,
Typically, most banks, most loans, there's usually about a 2% default rate. Ours is less than that. So of 100 loans, 2 might be late or delinquent or not paying on time. So it's really, and that's the reason banks use credit bureaus, because credit bureaus say, hey, this person has a history of paying on time, and that's why banks like collateral, because they know if we're on the title to your home or vehicle, we know you're gonna make that loan payment. So usually, that's a very good question. Default rate is what we call that, the non-performing loans. It's usually very small, under 2%.
Any other questions about credit that we can answer? Anything that you wanna know about credit cards, or? We did bring examples of a credit bureau. If you wanna go over that, we can. Has anyone ever seen a credit report? So this is what we pull. So when Steve and I do loans, this is what we look at. It looks like a bunch of mumbo jumbo, honestly. It's not easy to read, so we can go over it a little bit. So example 1. Where would you find the person's name, date of birth, any kind of personal information? Exactly, right at the top. Now, if I came in and said, I'm Autumn, definitely Autumn, and I have Autumn's social security number, they're gonna ask me for my addresses, they're gonna make sure that I know that I actually am Autumn. So they do catch stuff like that too, just so you know.
Yeah, if you pull your credit, you find an error, like I believe it is your credit. Zero, I'm pretty sure it's all too bad.
It could. So for this one, actually, do you wanna go over it? I feel like you did.
Yeah, no, you're right on. The very first section is your information, your name, address, where you might have work. It goes down, it gets profile. That's where you're always gonna find your score. And on this first example, you'll see FICO score is 620.
Oh, are you on number 2?
Is that number? That's number 2.
Two.
All right, number 1, model. Score 592. It's not a real good score. Drop down to the next section, collections. That's why the score's not good. A collection is, if you have a bill that you haven't paid, a company can turn you over to a collection agency, and they're gonna report that to the credit bureau. So that's a big drag, a pull down on your score if you have collections. A lot of it, if you look in the collection section, medical. Anyone that goes to the hospital, they're probably gonna have some sort of collection. It's ridiculous how much doctors and hospitals are, so that's not uncommon. At the bank, we kind of take that out of the equation, at least for us, because that could happen to anybody. The next section, it's called trades, and a trade is anyone that has credit extended fees. So if you have your home loan, your car loan, your credit cards, they're all gonna be listed under trades. And you can see automobile loan is the first one on that example. And there's like a key that helps you figure out what everything is. It shows when it was open, how high it was, the terms, meaning, what is your monthly payment. And then it gives a little record of your payment history.
So part of the reason why we want you to see this is because I didn't see mine until I got my first home loan, which was even an adult, much more of an adult at that point. So take a look at this. Yours is probably not gonna look like this because you wouldn't have.
You can find this on the internet.
Right.
You can find websites, free credit report, annualcreditreport.com, Credit Karma, there's a bunch of different sites.
So if you're over the age of 18 and you're wondering, what does my credit score look like? Or credit bureau rather, annualcreditreport.com is great and can help show you if there's any debts out there that aren't yours that maybe are showing up under you. So, but yeah, we like these. There's 2 examples. So you can see the second one has a good credit score, it's 620. It's better anyway. And then what all they have going on, which is a lot more. Mortgage, credit cards, yeah. I should look at example 2 before. I've only ever started one. So any questions about the credit bureau that we've showed you? Any questions about anything? We're happy to answer. Yes.
Credit,
Money general.
how many people ask for a no and all that? Like, how many people ask for the no and all that?
I couldn't hear. How many people ask? I have trouble hearing.
I ask for a no.
How many ask for loan? Every day. Every day. Today, I mean, some days it could be a couple calls.
I didn't hear it,
Um,
so.
Yeah. So whether it's car loans, home loans, credit cards, yes, daily. And again, that's why we're in business, is to make loans of one sort or another, whether it's a car loan, home loan. That's why banks and credit unions exist, so.
And honestly, one of the main things about credit is shop around. We want people to get loans with us, we want people to bank with us, but does it make sense for the person? So I had a young lady that I was doing a car loan for, and I just point blank asked her, is this the best rate that you found? And she was like, oh, I haven't looked anywhere else. And I was like, I wanna do this loan for you and I'm happy to, but can your dealer get you a better loan because car rates are so high right now? She actually did get a better rate with the dealer. So it's not that I didn't want to help her, I absolutely wanted to, but for her and being so young, it just didn't make sense to put her in a payment that was too high. So always shop around. You're not gonna hurt your banker's feelings, and if you hurt their feelings, probably don't bank with them. Because they're adults and they should be able to handle it. And it's all a business, so banks, credit unions, it's a business, right? That's what we do, this is our job. But you are the consumer and you have a right to certain things. So please shop around, read the fine print, make sure it makes sense for you.
And look at all the things that the, financial institution provides, maybe they have, slightly higher interest rate, but, as long as it's still reasonable, makes sense for you, if they have other products, or you already have an account with them, that can be really beneficial. It's a lot easier to make payments, it's much easier to have that relationship with your bank if things fall through, and it's much more beneficial, kind of approach that.
So, any questions, anything we didn't answer? How much longer do we have for them?
2 minutes.
Okay, all right, I mean, we can chat on for 2 more minutes, I'm sure I didn't say something. Yeah, if you guys have any questions, I know it sounds like you guys have banks and you're comfortable and you have the people in your life, but please feel free to reach out to us. I think Amber and Ethan both have our information and we would be happy to answer any questions. You're not obligated to bank with Lake City Bank, but we're always there. I'm right downtown, not too far,
What?
so.
What offers do you guys give, if people go to your bank, health insurance or stuff like that?
What
offers?
things can we offer?
Yeah,
Everything, so accounts, so checking, savings, credit cards, investments, mortgages, consumer loans, business loans. We're very heavily centered in business, but I work with consumers, that's what I do every day, and businesses actually.
Some banks do offer insurance, some banks offer that, we're not into the insurance business. Every bank has their niche, their specialty. Credit unions are known for car loans.
Yes.
Car loans are typically, credit unions, some banks are their specialty is home loans. Our Lake City Bank, 90% of our business is to business, commercial loans. So, business loans. So, anyways, thank you.